Good afternoon and welcome to the Relationship Management Update. My name is David Whitney and together with Sakitra Hammond, my colleague, we'd like to talk to you this afternoon about some of the lessons that we've been learning from the Relationship Management Pilot. Very quickly, Sakitra and I are both solicitors with a range of experience in practice and in advising and supervising firms in connection with regulatory and practice standards matters. Sakitra, over to you.
Thank you, David. Good afternoon, everyone. This is one of an initial series of 6 Freedom and Practice webinars that the FRA is hosting to support the transition to OFR. You'll be able to find a recording of this and other webinars on related topics on our website. We're planning some more for the autumn, so do keep an eye on our website for details and do feel free to mention these to your colleagues. David.
Okay, very quickly, the format of the webinar this afternoon follows the shape that we've used before for those of you who've tuned in on previous occasions. Sakitra and I will give a hopefully quite short presentation, perhaps 20-25 minutes, and we will have a number of slides to back that up. Sakitra's already mentioned you'll be able to download a recording with the slides after the event, and once we've done the presentation we'll go over to a question and answer session, and we'd be very pleased to welcome any input you have then. Partway through the presentation we may ask a couple of questions in a mini poll just to get some views from the whole of the audience about one or two topics. Sakitra.
Thank you, David. What are we focusing on today? Well, you see the list up there on your slides. Really what we're focusing on is the Relationship Management Pilot and sharing some of our early findings in relation specifically to sole practitioners and small firms who are participating in that pilot. So without further ado, let's move on to recap some of the things in terms of what the Relationship Management Pilot aims to do. And under OFR, supervision is going to be the risk-based oversight of all law firms. The 3 types of supervision that we envisage include close and continuous, that's what we call relationship management, visits, which could be triggered because of risk triggers or other themes, and desk-based, which are usually going to be used where either the close and continuous or visit type is not appropriate. The SRA is going to use a risk assessment of a firm or firm types to decide which forms of supervision it's going to use. The intensity of the supervision experience will really be driven by the risks posed by the firm. In the pilot, we'll be trialling how close and continuous supervision might actually work. Now, the pilot has been designed to test various hypotheses, and in particular, whether it's ever proportionate to use a dedicated form of supervision with a firm, and if so, in what circumstances should we be using it? So, should we be focusing on those firms that have a high likelihood of a risk occurring, or perhaps those that have a high impact when a risk does occur, or perhaps a combination of both? Now, we've covered some of the background in this in our webinar on the 26th of November 2010. So if you'd like further details on the background of Relationship Management Pilot, please do look at our website. David, would you like to talk to us about the pilot so far?
Okay, thanks, Sakitra. For those of you who've perhaps not picked up our press releases, the pilot is made up of 19 firms, and we've tried to select a range of firms from the very smallest. We have a couple of sole practitioners in our pilot, through to some of the very largest firms in the country. Our aim is to test this form of close and continuous supervision against all shapes and sizes of firms, so far as 19 can ever be representative of the 10 or 11,000 firms that currently practice. You'll see from the slide that within the 19 firms, not only do we have the 2 sole practitioners piloting with us, we also have 5 firms with less than 10 partners. So a third, in fact just more than a third, of our pilot is made up of firms which I'd like to describe as smaller firms for the purpose of today's exercise. I thought it might be helpful just to give you a flavour of how the relationship management process kicks off, so that some of what we say is put into context. We write to each of the firms who are selected for the pilot and advise them of the issues we wish to discuss in our initial meeting. And we have a standard agenda which is going to appear as the next slide, and agree in as flexible a way as possible how we will deal with that agenda at an initial meeting. That may include who attends the meeting, perhaps one sole partner who is responsible for risk and compliance, or at some firms we speak to a range of people, each with their own respective responsibilities. We try to get the initial discussion to be as relatively informal as possible, and that process often lasts between 2 and 3 hours. A common pattern for the initial meeting will be that the partner responsible for a particular issue will explain how that matter is dealt with at the pilot firm, and then we might seek clarification of anything we're unclear about, and in some cases we challenge particular comments or positions. Our aim is to try to develop the discussion into as two-way a dialogue as possible. And we found that once the ice has been broken, a number of firms have become quite comfortable and wanted to raise issues, regulatory queries with us, and matters of concern. And I think the point that I'd like to leave you with on this is that we are trying very hard to build trust and cooperation in this process. We're not trying to catch firms out. And so far we feel that the feedback has been good. Let me turn to the next slide, which is the first of a series of slides about lessons learned, and I'd like to pass over to Sakitra to start off this second half of the webinar.
Thanks for that, David. That's great. So what have we been learning? In terms of the firm's structures, in the smaller firms in our pilot, they've included traditional partnerships, a limited liability company, and an LLP. And most of them are looking at ways to evolve, to stay profitable and competitive, particularly in our new legal services landscape. In some instances, they're looking at new business models, and in others, considering different legal structures for the firm. So what might that mean for business models? Several of our smaller firms in the pilot are considering whether to add or discontinue particular services, and whether to change the way they charge clients for some work, so looking particularly how their model might work going forward. And we've seen some very innovative ideas, and we're very keen to see how they develop going forward. And one of the things to bear in mind when you're in the process of change is that there are possible unintended or unnoticed regulatory consequences. And one of the observations with the number of firms that we've been looking at is that they intend to widen the geographic in which they offer their legal services, so moving from their local position to perhaps a more national position, which is great. But one of the things that they may need to consider is that you might have a significant number of clients who are perhaps at a distance from you, and potential risks might occur as a result of that. So what we are recommending in those circumstances is that the firm should review its client engagement, its client services delivery arrangements, so that they make sure that they are compliant going forward. So, for example, have you considered the distance selling regulations? David, perhaps you'd like to pick up on some more of these.
Yes, just following on from that topic, Sakitra, a couple of firms that we've selected for the pilot in the next wave, but whom we had not yet visited, are virtual firms. And we have seen commentators consider that virtual firms may be a good way for smaller firms to remain competitive in the new legal services market, perhaps working together in some sort of umbrella arrangement. We have not yet visited, as I've mentioned, that key risks which we have identified as potential issues at virtual firms are likely to be the supervision of remote staff, the need to maintain consistency and quality of their work. So those are things that we'll be looking at a bit more closely, and if we're able to deliver a further update webinar, we'll no doubt report back to you on that. Just finally, on the point of governance, we have seen that in a couple of smaller firms, obviously not sole practitioners, but we have found that there are practices, perhaps not clear delegations, where a particular partner or an office manager may take responsibility for a particular risk area, maybe money laundering or complaints. Now, so far so good, but in one or two instances there can be some difficulties. One, there may be a slightly disjointed approach to risk management, where the two individuals don't necessarily have any kind of coordinated approach between their different risks. And secondly, where there is an assumption that one person is picking up all risk matters, and in fact things fall by the wayside. And it's worth flagging up at this point that, if you're not already aware, part of the authorisation regulations that will come in October require each recognised body to appoint a compliance officer of legal practice and a compliance officer of finance and administration, and it will be their responsibility to look at risk management and other controls in the round. I think we'll touch on it briefly again later in the presentation, and perhaps we can return to it as a matter of question and answer.
Moving on to what else we've learnt, looking at financial assurance and the importance thereof. Our aim as a regulator is to build public confidence in both the effectiveness of us as a regulator and, as a result, the professional standards of the legal businesses that we regulate. So the key part of this process, the public should be able to have trust in the financial stability of the law firms. So if they've instructed a firm to deal with a matter, they should have the confidence to believe that actually that business will continue long enough to deal with the actual engagement. Under the relationship management pilot, what we've been doing with firms is saying, we need to talk to you about your general financial assurance, looking at the function within each of the firms and how it operates at a high level. So we asked the firms to tell us about their structures, their systems of financial control, of how they're doing their budgeting and reporting processes, areas of the most significant costs or funding, their credit control, etc. So you're getting an idea that at a very broad level, we want to understand how each organisation addresses that particular function. Now, in at least two of the pilot firms that are participating, we found that the business's financial functions are actually outsourced either to an individual external bookkeeper or an accountant, or to a bookkeeping services provider. So it's an aspect that they feel that they can let somebody else take the general governance of. Now, even where firms are doing this, we are stressing that firms should remember that it is ultimately the firm's responsibility to ensure that they have met the requirements that are set out in the Solicitors Accounts Rule. Now, under the new proposed handbook, there is also the new Principle 8, that sets out that you should run your business or carry out your role within the business effectively and with proper governance and with sound financial and risk management principles. So ultimately, it will be putting the onus very much back on the firm to make sure that that aspect of the business is properly run. So we leave you with that thought on financial assurance. Moving then to professional indemnity insurance. At this juncture, we don't have a great deal to share, but what we can say is that the new startup firms that are working with us found that actually working with a good broker has had a beneficial effect on them in terms of their premiums. What we've heard from brokers is that it's important to stress the amount that people should take time to prepare and present their renewal forms carefully. And if at all possible, they may get more benefit if they're able to demonstrate or articulate how they identify and mitigate the risks that they face. David, anything to add on to that before we move?
No, I think I'd be happy to move to the next slide, and I'd like to pick up on 2 or 3 items from that general agenda that you saw a few minutes ago. We've already touched on client engagement and service delivery, so I won't deal with that in any greater depth, but let me talk a little about AML. One pilot firm, and this is not one of the smaller firms, rates the potential breaches of AML regulations as its very highest risk, not because it has poor systems, but more because it considers that the occasional technical breaches of the rules are almost impossible to avoid, and the potential reputational damage from a substantive breach would be considerable. Clearly, headlines that your MLRO is facing criminal prosecution does nothing for your business. These assessments mean that money laundering issues are regularly at the top of the risk agenda, the risk management agenda for that firm, and it continues to ask itself whether there are better ways in which it can deal with those matters. So even though it has good arrangements, good systems, good training in place, because of the seriousness and potential impact of a breach, it returns to this issue time and time again. I thought that was interesting. Conflicts. We found a mix of approaches across the pilot, which is, I guess, hardly surprising. These reflect the type of work the pilot firms do. In some practices, conflicts are more common than others. It also reflects how the practices have developed over time. And we've seen systems ranging from the very traditional circulation of lists of new clients and new matters through to the use of conflict checking software. And I'd just like to pick up on a couple of points relating to software. One small firm in the pilot obtains automated conflict checking as part of its outsourced accounting and bookkeeping arrangements. And we see pros and cons in that. Obviously, an advantage of the setup is that conflict checking is quick and consistent. A negative is that the system is only as good as the data inputted into it. So errors in names or addresses or matter details may mean that conflicts could be missed. And also, I guess that an automated system is never really designed to pick up conflicts which may occur after the matter opening period. So in all, I guess we are looking for systems which can deal with all of those aspects and be robust. A couple of quick points on confidentiality. The leading authorities in confidentiality involve some of the better known professional service firms, so it's clear to me from that that confidentiality is or ought to be one of the very highest risk areas for all firms, not just those at one or other end of the spectrum. Potential risk areas we've seen from the pilot are that firms are trying to take pragmatic, cost-effective outsourcing arrangements. We've mentioned those before, but in doing so, they haven't always had full regard for all the potential client confidentiality issues that arise from them. And there also seems to be potential risk for new firms where partners join from other businesses for confidentiality to perhaps not be fully thought through. Is there a good system for checking whether you can act where a former client is on the other side of a transaction or dispute? We've not always seen that thought through as well as we might. Anyway, let me take you through to the next slide. I've mentioned outsourcing. Sakeetra has already a couple of times in the presentation so far. And we've seen a wide range of different outsourcing, very innovative use of outsourced telephone switchboards, secretarial services shared with others, bookkeeping and matter inception we've mentioned, and also outsourced IT support and others besides. Now, this is an area of considerable interest to us. We are starting to focus on risk issues connected with outsourcing and trying to identify what might amount to best practice, and we hope, where necessary, to provide more guidance on the steps and issues that firms should consider when dealing with outsourcing. It will be, I think, part of many firms' response to the increased competitiveness in the legal services market, but it's important to consider all the risks, whether that's quality control, supervision, confidentiality, IT security, and perhaps most important of all, in many instances, do you have the client's informed agreement where issues of their data or confidential information are concerned? I think that's probably enough from me on outsourcing. Sakitra, can you perhaps pick up some of the points on internal controls and supervision?
Thanks, David. I think you make very valid points, and certainly I think outsourcing is going to be one to watch for us as time goes on. So moving to internal controls, what we're asking firms are whether they have sufficient checks and balances to prevent fraud, theft, non-compliance with key regulatory requirements, and we're seeing a wide range of approaches to this, and generally, actually, the firms in the pilot have been quite good at identifying those internal controls. In addition to that, and it's something that we've already touched on, David spoke earlier about the roles of the compliance officers for legal practice and for finance and administration. The key thing with these going forward is going to be the clear lines of responsibility within a firm for dealing with those internal checks and balances. Have you identified them? Less of an issue for those that are sole practitioners, but certainly within the smaller firms, we've been discussing with them how they're going to take on these roles and identify those clear lines of responsibility and overseeing those functions within those firms. So looking at specifically at supervision and sole practitioners, who and when should they consult about issues of uncertainty or arranging cover for their absences, for example? And we've been talking about how sole practitioners could do that, and we've been saying to them that they should also have a mind's eye to the issues of independence and confidentiality. Looking forward, firms should be looking at Section 2 of the new proposed handbook and Principle 8, as we've already been discussing, to look to ensure that they have sufficient controls within their businesses. I'd like to move on to the next slide, in fact, now, to lessons learned and how we approach risk in particular. And we've been asking all firms who participate in the pilot to say how they address risk and compliance, and in particular, what they consider to be their top 5 or top 10 risks. And there are 2 reasons for doing this. Firstly, under OFR will be, as we've been highlighting, the requirements under Principle 8, firms will be asked to demonstrate how they address risk. We need firms to proactively think about the risks that they face. Secondly, we need the firms to think about how they can mitigate against those risks. Now, we've talked previously in our Relationship Managers Pilot program webinar back in November about risk registers and what they might do, and we don't intend to rehash it, but given the changes that are coming and how we will be asking firms to demonstrate compliance with risk, we thought it would be interesting to raise the point of risk registers and their use. So we're going to look at some of the pros and cons of those. Let's start with the pros. A register could mean that you have a centralized place to record all of the risks you face. You can then see the highest ranking risks and the ones that require the most attention. From there you can build your approach and how you might mitigate those risks, who will be responsible for each of those risks, and how you're going to tackle them and review them. In the case of any absences, they can be picked up easily by others, for example. Now, bearing in mind all those pros, there are obviously going to be some cons. So if you're a sole practitioner, for example, you're the only person who needs to know what those risks are, and it's very likely that you will have already identified them and perhaps even have action plans in place to address them. So it can be time-consuming for you to actually produce a document to say all the things that you already hold in your head. And it's only going to be useful to you if you're actually going to make it a living, functional document which you review periodically and update. Now, what can you adopt? We're not saying by any means that you should all go away and produce long, complicated documents. The key point for us with this is, what have you done to look and tackle the risks within your firm? David, what could you add to the things that I've been talking about?
Well, Sakitra, not much to add. You've been very comprehensive. Perhaps just a couple of points, though. Focusing on the point you made about sole practitioners, I've had quite a few conversations with sole practitioners who obviously are concerned that they might have more red tape and further hurdles to cross over from the regulator. What we want is something that would be helpful to you and also helpful to us. And I think the point that Sakitra made about a document which is useful over time is the key point here. Risks that you can actually identify within your business now and how you are working with them and managing and mitigating them, in a year or 18 months' time, you may have successfully reduced some of those risks, and your register may record the changes made. That document, should we need to engage with you, would be very helpful for us for you to demonstrate just how you have dealt with those matters going forward. So it's not a worthless exercise. It's a very helpful document, and the issue is really around the degree of detail and how much time it takes to create. So those are my thoughts, Sakitra. Nearly time to finish, I guess.
Absolutely, David. I think we can actually move on to perhaps taking questions from you. We'd like to hear what you've been thinking. And
well, just before we do that, one last housekeeping point before, or two housekeeping points. If you have any points that you wish to raise with us after this event, you can see our contact email details on the slide. And I think as a final slide, is that something we show now or after the questions? We will show a slide after the questions which gives you the CPD validation code. So over to you now. And I think we have one question here, and that is, it's quite a general one, but quite a good place to start, I think. When does the relationship management pilot end, and what happens next? Sakitra, what can we say about that?
A very good question. We hope to bring the pilot to an end at the end of July. That should give us a good few months to run with those firms that are participating to see how the relationship would work over a period of time. So end of July to bring the pilot to an end. We've then got to collate our thoughts and our findings over the summer and make our recommendations for how we think relationship management should be rolled out to the profession as a whole, bearing in mind those things that we have set out to test. So it won't be until sort of September time that we'll be able to share our findings on a wider field.
I think that's right, Sakitra, but during the period from April through to October, we will be trying to share as much information with firms about the transition to OFR, and where possible that will include information about relationship management. Now I have another question here, Sakitra, which I'm happy to take, and that's one from Azinda. Is there a checklist available from the SRA that a firm can use as a benchmark to check against for approaching risk within a firm? Well, the quick answer, Azinda, is that there is no such list at the moment, and I think what we're trying to do is to avoid too much of a prescriptive approach whereby we say, here is the checklist for all firms. But I think it's fair to say that we are trying to develop our own thinking in this area, and in due course we may provide more guidance, or if you have a particular issue of concern, please drop us an email to the relationship management team, and we will try to help you. So a bit of a holding answer on that one at the moment, but watch this space.
That's great. Thanks, David. There's another question here. It is difficult to consider going into partnership when there is not enough manpower to monitor the financial position of each partner. How do the SRA consider a sole practitioner can overcome the need to relinquish financial control and the checks on the other parties involved? It's a very interesting question, and I'm not sure we have a specific answer to it. But if you are thinking of going into a partnership, obviously there are the due diligence aspects that you should consider when going into that business. And one of the things that the new code is going to be asking you to do is to look at, as we've already discussed, appointing a corp and a coffer, and perhaps one of the roles could identify within the firm somebody who monitors that overall, perhaps in the role of being the compliance officer for finance and administration, perhaps, David.
Yes, I guess that part of the role of oversight of financial position could be outsourced to an accountant, as long as each of the parties to the partnership were happy with the work that was handed to them, and where the responsibility of the accountant stopped and the COFA started.
Indeed, and I think the other crucial point to remember is that ultimately you would be responsible as a partnership, so you would be liable for each other. So perhaps there's something already inherent in that setup that makes some of that sharing more readily possible.
Okay. I'd like to move on to another question. This is one from Nick Murray-White. Is it the FRA's intention for there eventually to be, say, no more than 5,000 firms, with none of them having less than 10 partners? Well, Nick, I'm not aware of any intention along those lines. I think our intention is to provide a framework of rules to suit the new legal landscape, so that the market can actually work in its own way to find what is required for the consumers of legal services. We don't have a particular blueprint that we're working towards, just to facilitate a more competitive, transparent, and a profession which is as highly regarded and as well regulated as possible. Have you got any thoughts on that, Sakita?
No, David, I would completely agree with you. There is no set agenda with any of those intentions, and I would completely confirm what you've said. Should we see if there's any telephone calls waiting for us? Perhaps somebody would like to speak to us.
There are no questions via the telephone at this time. However, if you do wish to ask a question via the telephone, please press star 1 on your telephone keypad and wait for your name to be announced.
Okay. Thank you. We have another call here from Julia Burgess, wanting to know if there will be any roadshows where scenarios are worked through by the SRA so that firms have a full understanding of what is expected of them in the current approach, as the current approach is open to different interpretations. Another good question. I think we certainly have a plan to run some roadshows, as we did in the summer of last year, and we're hoping to run those perhaps in the autumn. We should be able to release details of those in the near future. The contents of those workshops that we plan to run with them are being considered at the moment, and we should be able to release some information. But certainly we can take away the suggestion there that actually you'd like to see some scenarios to help you look at what the approach is and give some reassurances about the interpretation, perhaps, of some of the issues arising.
Yes, and Julia, assuming that you're still on the other end of the line, it would be very helpful if there were particular areas that you wanted to have guidance on. If you were to drop us an email, and we will try to work them up, and it's in all our interests to identify the areas which are perhaps causing confusion or concern, and we certainly like to help as much as possible. One of the areas we touched on earlier was the question of colps and coffers, and without wanting to be too repetitive on this, I would highly recommend that anyone who's not had a chance of looking so far, you should look at the draft authorisation rules to understand what the likely requirements are going to be. I say likely requirements because in our most recent consultation, which was on the handbook disclosed in mid-January, we received a considerable amount of feedback on the requirements for colps and coffers, and this matter is currently being dealt with and looked at in more detail by a reference group, a cross-section of solicitors and lawyers from various interest groups and firms who are providing us with comments about how the draft rules should be changed, and we are taking those points on board, and I hope they will feed through into the final version of the handbook, which will be published, I believe, on the 6th of April.
That's right, David. Looking at some further questions, perhaps just looking at some of the questions coming in there, what could we pick from that list, David? Bear with us while we try to read and pull out some questions for you.
One point that some firms in the pilot have been concerned about is the amount of information that we might request from firms, both in the pilot and in supervision, and as a general requirement on all firms throughout a given year. Now, we are currently rolling out a new project in which we are designing and starting to use online forms, so that information that currently is submitted on recognised firm forms and in some instances can take a great deal of time to fill in, will soon be trialled as electronic online forms, and will be, we hope, possible to fill in certain information and have no need to repeat the exercise unless there are changes. And we again are working with a number of firms to try to trial that process and make it as usable as possible. But we do require a fair degree of information, because without knowing the shape and size of firms, it's very difficult for us to produce realistic risk profiles, which are the driver of everything in this new OFR approach. So watch out for further information about the enabling project information gathering. We hope to publicise some more about that in the spring, and we are keen to ensure that providing information to the SRA is as easy as possible.
Thanks, David. Just looking at some of the questions that have come in, one of them is, what is the feedback from the firms who have been involved in the pilot? And that's a good question, because we've taken up quite a bit of their time. It has been resource intensive for some of these firms, and actually most of the feedback has actually been very positive to say that they have found that engaging with the regulator to be very positive in a way that they've not had the opportunity to engage with us before, and actually to tell us of the issues that are concerning them and to be able to raise them with us in a constructive way has been helpful. So we're taking that as a great positive and hoping to continue to engage with them over the coming months. So the feedback, I'd say, is positive, wouldn't you, David?
I would agree wholeheartedly with that, and I think what we have found is that some of the firms who we've been dealing with in a relationship management form have actually come back to us. I talked about trust and cooperation. In one or two instances, and these are not necessarily pilot firms, but firms who we've talked to in our general contact and selection process, one or two have found it necessary to come back with self-reporting issues, and the whole process has been much more straightforward, much more focused, and I would say much more effective as a result. So a byproduct of relationship management, I think, is more proportionate and better enforcement where that is, unfortunately, necessary. So that has been an interesting and perhaps unexpected byproduct of what we've been doing.
Absolutely. Another question we have here is it likely that you will visit all firms in the future? I would say that that's unlikely, and as we said in our presentation earlier, that actually we will apply the supervisory resource that is proportionate to the risk that firm raises. So it may be that some firms don't pose any risk to our regulatory framework at all, in which case it's very unlikely that they would be visited by the FRA in any shape.
That has to be right, Sakeetsha. What, of course, we've said already is that our supervision is risk-based oversight of all firms, so that whilst we may not be able to visit all firms, it is likely that in some shape or form every firm will be considered by our supervision team, whether as an individual firm or as a part of a particular tier or segment or work type. So the occurrence or non-occurrence of a visit doesn't necessarily mean that the firm is in some way slipped under the radar. It's just that we have to allocate our supervisory resources proportionately and cost effectively.
Shall we see if there's any telephone callers waiting for us to ask us some questions? Steve?
There are no questions via the telephone at this time.
Okay, lovely, thank you.
Well, I think that we are pretty much at the end of the written questions that we've received. So unless somebody has a burning question which they'd like to email into us, I think we will be very shortly wrapping up. The one or two last things that we have to do is to remind you of our contact details, which are there on the slide. Please, if you have any queries, do feel free to email, and we will do our best to either answer them or direct them to one of our colleagues who can. And a farewell from both of us. Thank you very much for participating.
Thank you very much.